The Philippines is making headlines for its rapid economic growth, an unexpected story that's capturing the world's attention. Once overlooked, the country is now at the center of conversations about Asia's next big success. Manila, the bustling heart of the nation, is now an unexpected economic powerhouse. Its skyline, once modest, now bristles with modern skyscrapers and vibrant business districts, signaling a new era of prosperity. For decades, the country was dismissed as the sick man of Asia, plagued by political turmoil, economic mismanagement, and devastating natural disasters. Many doubted it would ever catch up with its neighbors, but the story has changed. The numbers are not just good, they're remarkable. Economic indicators are surging, and the central bank is reporting record highs in growth and investment. This isn't a one-off. It's a decade-long transformation, marked by consistent reforms, infrastructure upgrades, and a young dynamic workforce driving innovation. The Philippines is now posting some of the highest growth rates in Asia, touching lives and fueling optimism for over 110 million people. The middle class is expanding and consumer confidence is at an all-time high. This is more than a lucky streak, it's a fundamental shift. Filipino entrepreneurs are launching startups and established companies are expanding into new markets, creating jobs and opportunities. Investors and global banks are taking notice, upgrading forecasts and pouring in capital. International companies are setting up regional headquarters, betting on the country's long-term potential. The question is no longer if the Philippines can grow, but how far it can go. Young graduates are entering the workforce with new skills, ready to shape the future. Yet, challenges remain. Poverty, infrastructure gaps, and political uncertainty still cast shadows. Not everyone is benefiting equally, and the road ahead is far from smooth. Is this growth real and sustainable? To answer that, we need to dig deeper. Experts are analyzing the data, searching for signs of lasting change versus short-term gains. We must look past the headlines and examine the data, the history, and the engines driving this economic surge. Understanding the roots of this transformation is key to predicting its future. The Philippines, once lagging, is now outpacing many neighbors. Its exports are booming, and its GDP growth is setting new regional benchmarks. It's become a case study in economic revival, discussed in universities and boardrooms around the world. Policymakers and scholars are eager to learn from its experience. The world is watching, and the journey is just beginning. International media are spotlighting the Philippines as a rising star in Asia. Let's uncover what's really powering this remarkable rise, and what it will take for the Philippines to truly become Asia's next economic tiger. At first glance, when you look at GDP per capita charts, it's easy to think the Philippines is lagging behind its neighbors like Vietnam and Indonesia. The numbers seem clear and straightforward, and the rankings appear to tell a simple story. One country is ahead, another is behind. But this view ignores history. It overlooks the unique journeys each country has taken, and the very different starting points they had decades ago. The Philippines actually started strong in the mid-20th century, ranking second only to Japan in Asia. Manila was a hub of commerce and culture, and the country was seen as a rising star in the region. But decades of political instability, economic mismanagement, and social unrest caused stagnation. While the Philippines struggled, its neighbors were just beginning to build their economies from the ground up, learning from the region's successes and failures. So, when countries like Vietnam and Indonesia catch up, or even surpass the Philippines in certain metrics, it's not simply a story of Philippine failure. It's a testament to their own rapid progress and determination to improve. Imagine a runner who sprinted ahead at the start, stumbled badly, but then found the strength to get back up and rejoin the race. That's the story of the Philippines. The real story is the Philippines' acceleration after years of stagnation. The country is now regaining its stride, with new industries, a vibrant workforce, and a renewed sense of purpose. Judging solely by today's rankings misses the point. It's like looking at a snapshot and ignoring the entire movie that led up to it. The key is the country's momentum and resilience since 2010. The Philippines has shown a remarkable ability to adapt, recover, and push forward, even when the odds seemed stacked against it. The Philippines is writing a new chapter, not just competing in an old race. It's forging its own path, driven by innovation, education, and the energy of a new generation. Its growth rate and ability to rebound from setbacks are what make it stand out. These are the qualities that matter most in a rapidly changing world. Simple rankings and comparisons can't capture this dynamic transformation. They miss the underlying story of perseverance and renewal. The real measure is the speed of change, the pace at which the Philippines is reinventing itself and seizing new opportunities. That's where the Philippines surprises and impresses. Its progress is often underestimated, but the momentum is real and growing. Let's look at how this momentum began and what it means for the country's future. 2010 marked a turning point in the Philippines' modern history, a moment when hope began to replace uncertainty, and the nation looked forward to a brighter future. This new era began with the election of Benigno Aquino III as president, a leader whose name carried the weight of a storied legacy and the promise of reform. Aquino's administration placed a strong emphasis on good governance and a relentless fight against corruption, which had long plagued the country's institutions and stifled progress. As a result, the Philippines achieved its first-ever investment-grade credit ratings from major international agencies, a milestone that signaled newfound trust in the nation's economic management. Between 2010 and 2016, the economy surged ahead, growing at an impressive rate of over 6% annually. This wasn't just statistical growth, it was visible in the bustling cities, thriving businesses, and improved livelihoods of ordinary Filipinos. Major infrastructure projects were launched, from roads and bridges to public transport upgrades, laying the groundwork for long-term development and connecting communities like never before. The private sector responded with optimism, expanding operations, hiring more workers, and investing in new ventures that fueled innovation and job creation. Aquino's Dang Matuwid, or straight path, became a rallying cry for transparency, accountability, and ethical leadership, inspiring both public servants and citizens to demand better. The country's reputation transformed, shedding its old image as a high-risk destination and emerging as a credible, attractive market for global investors. This shift unlocked new streams of capital, encouraged long-term business planning, and gave entrepreneurs the confidence to dream bigger. Structural reforms strengthened the economy's foundations, making it more resilient to shocks and better equipped to face the challenges of a rapidly changing world. The momentum built during these years provided a crucial buffer, helping families and businesses weather future storms. The Aquino era was not just a fleeting moment of prosperity, it was a period that set the stage for sustainable, inclusive growth for years to come. The foundation for resilience and progress was firmly established, visible in the country's modern infrastructure and dynamic urban centers. With renewed confidence, the Filipino people stood ready to face whatever challenges the future might bring, united by a sense of purpose and national pride. Yet, as the world would soon see, global tides and unforeseen crises would put this newfound strength to the ultimate test. The Philippine economy doesn't exist in a vacuum, it's tied to global currents. The post-2010 boom coincided with a favorable global environment and strong investment flows. Good leadership helped the country ride this wave, but no leader controls the tide. International capital, trade, and commodity prices shape the landscape. When global conditions are good, growth is easier. When they sour, even the best policies struggle. The real story is how the Philippines navigated these tides. Success came from both smart domestic reforms and adapting to global forces. This interplay is key to understanding the country's resilience. When Duterte took office in 2016, the global tide shifted, enter the US-China trade war. This conflict disrupted supply chains and dampened global trade, hitting the Philippines hard. Despite this, the economy kept growing, thanks to the build infrastructure push. Massive spending on roads and airports created jobs and boosted demand. The trade war forced the country to adapt, highlighting the risks of over-reliance on single markets. Some investment shifted from China to Southeast Asia, and the Philippines was ready to capture it. The period tested the economy's agility and resilience. Growth slowed but remained respectable. The foundations laid earlier helped weather the storm. The Duterte years proved the value of adaptability. But an even bigger test was on the horizon. COVID-19 was a global shock, and the Philippines was hit hard. Strict lockdowns, while necessary, brought the economy to a standstill. Businesses closed, millions lost jobs, and Manila's streets emptied. The economy, reliant on services and consumer spending, contracted by 9.5% in 2020. Unlike manufacturing-heavy neighbors, the Philippine service sector was especially vulnerable. Tourism collapsed, and remittances from overseas workers dipped. The pandemic was a perfect storm. Domestic consumption and external income both took hits. The recession wasn't about weak fundamentals, but about a unique economic structure facing an unprecedented crisis. The pain was real and widespread, yet this was only half the story. The real surprise was how quickly the country bounced back. The pandemic set the stage for a remarkable comeback. The resilience built over the previous decade would soon be put to the test. The world watched as the Philippines prepared to rebound. The fall was dramatic, but the rebound was even more so. By 2021, as restrictions eased, the economy roared back, pent-up demand surged, businesses reopened, and infrastructure spending continued. The result, a V-shaped recovery with growth rates among the world's highest. The Philippines outpaced regional and global averages, erasing pandemic losses quickly. This rapid recovery showcased deep economic resilience. A young, growing population fueled demand. The private sector adapted fast, driving the revival. The recovery wasn't just government-led, it was powered by the energy of people and businesses. The Philippines proved it could take a massive hit and bounce back stronger. Perceptions shifted. This was now a story of resilience, not just growth. The comeback cemented the country's status as a dynamic regional force. But what are the engines behind this resilience? Two engines drive the Philippines' resilience: remittances from overseas Filipino workers and the booming BPO sector. Remittances provide a steady flow of foreign currency, supporting millions of families and fueling consumer spending. Even during COVID-19, remittances dipped only briefly before rebounding. The BPO industry, call centers and outsourced services, employs over 1 million Filipinos and adapted quickly to remote work. As the world went digital, demand for BPO services grew, providing jobs and growth. These sectors are stable, globally connected, and less dependent on local politics. They support the peso, keep inflation in check, and build foreign reserves. This unique structure helps the Philippines weather global shocks. Remittances and BPOs are the unsung heroes of the country's economic story. They're key to its quick recoveries and ongoing progress. The Philippine growth story is about roles: government as referee, private sector as the main player. The government's job set clear rules, fight corruption, and create a stable environment. Aquino's reforms unlocked private sector potential. Duterte's infrastructure push removed barriers. But it's businesses, entrepreneurs, and workers who drive growth. The government builds the road, but the private sector drives the economy forward. The fastest growth came when government enabled, not controlled, the market. Resilience came from dynamic sectors like BPOs and remittances, not bailouts. The lesson: prosperity is a partnership. Government is enabler, people and businesses as engines. The challenge ahead is to keep this balance, clearing the path for continued growth. The Philippines' journey shows that real progress comes from the ingenuity and drive of its people.